Hello guys, welcome to the Trading Parrot. Yesterday morning, 20 hours ago, I published this video. 120k is on the table, FOMC level volatility incoming. Later in the afternoon at 3 p.m, while the price of Bitcoin was stopping at 108k, I published this reminder that although the RSI is very happy here, hitting the top of the statistics coming from percentile nearest rank, looking so bullish, I wanted you to be fully aware that the shorts are doing everything that is possible to push the price down. This here, guys, is a summary of each individual word of warning at 108k that went live in this video yesterday. And my point is not that the price can go down or up, because that's always the case. There's only two directions. The point is, and I sustain it, 120k, it's still on the table. But for the short term, there were these elements putting this small move on the 4-hour and even on the daily at risk. We were dangerously approaching a selling wall. The global Binance longs were being at the very low end. We were at the top of the delta. All the liquidation prices substantial in the chart of the past 30 days were below the price. The delta was 500k in green. None of these things are sufficient to push the price down. But when you put them all together, they can cause some drawdown, some volatility. The most immediate liquidation level that we covered yesterday below the price was 103k. We're gonna do an overview of where we are right now as we approach the FOMC meeting. Let's look at the numbers, not just the numbers, but actually macroeconomic numbers as well, like the dollar, the gold. Those things say a lot more than the actual outcome of the FOMC meeting, because they tend to front run these events. We are expecting further volatility, and I think it's gonna be a very interesting day. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And I know this decision might be a little bit unpopular. I haven't been asking for likes. I haven't been mentioning any sort of information about likes, but I think that has not been helping the channel. And if you like this content and support the channel and you want me to keep doing this, we are going to have always this short section where we look at the likes of the previous videos and ask for your thumbs up. Yesterday video on Bitcoin got 300 likes. The aggregated alpha of the short-term selling pressure did play out with 5% down from 108. The tweet was just 10 minutes before we went from a candle about to put a new higher high on the RSI 4-hour to actually completely breaking down and reaching 50 on the daily as well. We're going to look into that in more detail in just a second. So guys, I will really appreciate if you can hit a like on this video, if we can get over 300, 400 likes today, and of course watch the videos from yesterday until the very end. Give the video a like, write down comments, all of that is always helping the channel. Let's go into the content. So it's 11 a.m, roughly 2 hours and a half to the first event of the day, but actually what we care about is the one in the evening at 7 p.m. in UK time. That's the interest rate decision. It's gonna be quick and painless, hopefully. If you didn't watch my video from yesterday, it was almost a half an hour video. It contains loads and loads of alpha, and I understand that the views are down at the same time. Searching for Bitcoin is down here at 44 from 66, so that makes sense. But don't miss this alpha, because this alpha, the value is very long lasting, not just for today, but probably for the months to come. We are 8% in December in the green, and I'm gonna now put a stop in here, because at 108k with the CPR level, you can see that it was a perfect rejection from the CPR level right there at $103.81. It cannot be more perfect than that. And this is deviating from what we can see in this area, because I suspect that this green candle that took out the 104 is equivalent to this one, and in 2020 we were at this candle already hitting the second CPR resistance, not just the first one. And indeed, days after, we came back to the first one for a retest. So what we are doing today during the FOMC meeting, or prior to it, is kind of a rejection at 108. And my problem with that is, if we close today like this, we're going to undo the bullish cross from the MACD. You can see that it was gaining momentum in here, but on the third candle, it's already losing it. And if we look at 2020, at the same time, we got at the 16th of December, the bull cross. 16th of December here is also the bull cross. No gap, no timing difference. It's just perfect as F. The only difference, if you are putting enough attention to the charts, which you should, is that the MACD line in 2020 was at a 650, coming back down from 1,300. In 2024, we are already a lot more overextended. This is at 1,300, this is at 6,400, and we have retraced to 3,000. And if we look at the MACD from 2020, you can see we've never been this high. Past cycle was 5,000, 2017 was 2,000 and a half. So just doing linear regression, this should reach 7,500. And let's do the linear regression just for the fun. We're gonna do it visually. So this is calling for the MACD to reach that level. I guess my point is today, I wouldn't like to see a bearish cross at this level. Not just because it's a bearish cross, but also because we are doing it from very high relative to what we did in 2020, where we did it from very low, and then we have all this upside to get to the 5,000 levels. Yes, we are repeating the same movements, but we have to be clear. We have gone already a lot up in the MACD comparing to 2020, and that's something that I wouldn't like to ignore. Why? Well, because even though I think there's still upside, the upside that we have at this point in the cycle, I don't think is as high in terms of momentum, not necessarily price, as what we had in 2020 at the same point in time in the cycle. Having said that, 120, I think that is still doable. Let's go to 4 hour. You can see that we lost it. We're gonna be on a lookout for a reversal in here. For looking for a reversal, we need to see what sort of formation we get there. We haven't done a full reset to 37, which will be 101K. That is good. We are just holding here next to the support of 103.7. Let's add it there. Of course, if we lose that, the most obvious next level is 101, but that all depends on how the market is gonna perceive the outcome of the FOMC. Looking at the daily, I think we haven't broken anything in here. Yes, there is a local breakdown there, but that is not such a bad thing because of the context. The context is that from this point, we put a new higher high relative to all this resistance horizontal. And after that, yes, we have a little bit of an extended pullback, but it hasn't taken out the previous high either. So I think we can kind of forgive a little bit this low quality breakdown on the daily and still keep an eye for potential additional upside towards 79, which is the level that we were talking and aiming with the daily time frame. The 4 hour has done something more important, right? It lost the global breakout. It had a local breakdown. It did a liquidity hunt in here. The liquidity hunt is extremely obvious with all these wicks to the upside. And at the moment, all entries here at the top are suffering getting liquidated. These are longs being liquidated. We're going to look at the liquidation delta, how much it has reduced from 500K, because that is relevant. The lower it has gone down, the more bullish we should read that metric. On the daily, we are still inside the channel up. After this fake out, we regain it and we haven't lost it again. We are just there putting a higher low and a higher high. The analysis from the point of view of CME is that we have come back for a second time and still haven't closed fully the CME gap. Just probably a 20-30% of it is gone, but there's still 1K left to close below the wick that we just produced yesterday. So the question is, did the price just come here to make us believe that it's gonna close it and it won't? I think there is a good chance that we close it at 102.3K. That's probably 101 price on a normal exchange. There is just this wick in here that is keeping me thinking that if it's a coincidence that is there right next to what we managed to achieve, could it be that an indication that we won't need to go as low because we were already here? Partially, it alleviates that need to come and close this gap, but that's just a finger in the air idea. Big Well Explorer is still happy here. Yesterday we were fearing that we were going to bounce back up, but actually we closed at 0.62. That means deposits are underperforming withdrawals, which is bullish for large holders. And we haven't had a single day of outflows on the ETFs, which is very bullish. You can tell that it seems to not stop in terms of accumulation. We are still in extreme greed at 81. Yesterday we were talking and giving a full analysis of the weekly RSI being above 80. Today we are below 80, but the analysis is the same. If we were to continue to the upside from here, you must watch that video and understand the implications, not just of being above 80, but getting closer to 84, which is such a critical place to be in a cycle. Think about it as being a teenager and not carrying any protection. So from the evening towards the morning, there's been many liquidations. Let's filter by BTC. Most of them seem to be coming from the longs, but there are some shorts now starting this morning, and 400 million in liquidations in the last 24 hours, which is elevated but not as substantial as the over 1 billion that we saw recently. Short-term liquidity pools are red below the price in the shorter term. They started longing when the price was at 107k, creating these stop losses and risk accumulations there. Very quickly the price say, oh, hey, where are you going? No, too many longs, and price went straight to take them out because they have the incredibly smart idea of placing all stop losses in the same place. Below the price we have 99 and 98.5 in red as well, but as you can see it's just all very homogeneous below the price with the exception of what we just took. And above the price we have the 108.5. On the longer term you can tell that we completed the milestone of taking out 108k. 5 days ago we were doing the analysis of the 108k and people were asking, why are you just aiming at 108k? Hey, this is a channel where we cover extensively swing trading opportunities for Bitcoin and altcoins, and that's precisely what we did, right? We went to 108k and we saw a rejection there. Now we are aiming for 120 and we are doing it at a moment where the price is retracing. So if it plays out, eventually it's going to be seen as just another good opportunity that we introduced as well in the channel. Levels of support and resistance are just the same, I will say, so you can go and watch the video from yesterday. I don't need to annoy you repeating them. Let's see what we are preparing at 120 in terms of liquidations, and we have some early adopters in here, some good candidates that want to give up their money at 117 and 116. 120 is a little bit beyond the high levels of liquidity, so maybe we wouldn't get to 120 unless we go to 126 and we take this chunk in here. So I will say the big price is somewhere at around 15 to 17, but beyond that it diminishes very significantly, so maybe that number is not 120 and it's just 17. So let's see all the alpha that we used yesterday. I know that most people that are watching this channel are not watching it just to get told buy or sell. Is it going up? Is it going down? You can find plenty of those channels on TikTok, and I'm wishing you all the best luck in the world. In this channel we're gonna continue learning from alpha that actually works, and you can see that the global longs were very low in here, and we say that out of 4 times or maybe 5 times that we reach the red. Watch my video yesterday for further detail on what the hell is this. 1 time it failed, and that was around this area where the price still carry on going up. All the other 4 times it came back down, and now we can say that we have exited the red once again, and the price has done that retracement of around 5% that it laid out again. Now longs are stepping back in on global longs on Binance, and that is pretty much the way it works. You can see that once we exit the red, sometimes price just goes sideways and the actual move down happens after, just like in here as well, and some other times at the same time you exit the red, the price starts the retracement with 8%. In this case we exit the red at 105.5 and carry on additional 2.3. The dump started within the red. So I'm taking all those my notes for myself. These charts are available in links in the description, or you can go straight into the tradingparrot.com/charts. It's actually called High Block Capital BTC. That's the link to copy the chart, and then they get 15% off because you're going to need a subscription with High Block Capital. The second alpha we gave yesterday about an area to short in here was the elevated level of ask liquidity that we saw in here. We also say that this constitutes constitutes a breakdown, which means that we have beyond what the trend was saying. The trend was saying we are diminishing the amount of ask liquidity, shorting liquidity, and suddenly we get this spike at 108K, and that is something that should always poke you in your shoulders if you are in a deal there. Right after we started coming down with the price, then we started having huge amounts of bidding liquidity. Actually not huge, 0.16 is not that much compared to 37, which coincide with the two best times to buy, which was this area and this area. Now this is kind of in the middle, so it can happen in this area there. If we see a spike, we always note it in the channel, so I think my mind note says it worked again. Now the delta has reduced from 500k to 120. That's a pretty significant reduction. I would like to see it always in the red to start becoming more bullish, but hey, the ask liquidity is gone. The small amount of global longs is also gone. They are still not yet in the full-on alpha for buying, but we are out of that extreme danger. That's how I read it. Let's have a look at the order book, and all cohorts of wells have been selling. This point in time, you can see that the sell pressure increased at the point that we were approaching the 110. We barely got to 108, but now they have gone flat as we approach the FOMC meeting, and I guess there is some support here at 103. It's not the best support ever, it's just 29 million. After that, at 95, we get an additional 40 million, and at 100k, we got 7 million. So there is not a lot of support really in here, but at least the selling has slowed down. And another alpha that we covered yesterday is that at this area in the trend line, pinching it is very high risk. This and these areas, along with all the ones from the previous ascending channel, were great areas to consider to close your longs, and the areas at the bottom to enter longs. We haven't had an awesome alpha, any golden call in here for a while. The last one was end of November. But if we do, and you're subscribed to my Telegram, Instagram, and Twitter, you will be the first one to know. All those links are in the description. Do not search for me because you're gonna end up following fake accounts. There are a billion trading parrots, so just go to the description in the video and only use those ones. Liquidations above the price, we have 105, but nothing very substantial, maybe 108.6, just because that was the point the price started coming down and there are still shorts open. 99k is quite substantial at the moment, the largest one, and 93k. The fair value gap above the price going to 105 makes it a quick win for a very short scalp to the upside, and in case it fails, you have the next fair value gap at 103 to 102.5. I guess if we exit this area of fair value gaps, excluding the 101 that is just too small to mention it, we got 99 to 97.7. Summarizing the daily, I will say I'm bullish on the daily. I still think that there are a few more pushes that we can do in this area. The 4 hour got lost. This is a fake out. Let's be very careful today if we complete a head and shoulders here, because you know we got already that head there, and if we were to break down like that, if we take all this high, we can go to 99k and take that level that we already mentioned in multiple liquidation levels. Fair value gaps are there. That is beyond the CME gap, sure, but I'm expecting volatility today, and that volatility can play out in any direction, so we need to be aware of what are the points of interest. Thinking about the previous performance in 2020, I have a theory and I'm gonna share it now, which is this rejection at 108 that happened on the first CPR level. We can start thinking that is equivalent to the one we have on the second level, in which case we need to be thinking about some turmoil in here and eventually breaking out about 100k so we can go to the next CPR level, which coincidentally is at 120k. That is kind of my bias at the moment, to look for that bottoming process and retrial of breaking above 100k. Liquidity is heavy at the upside, but of course if FOMC disappoints general markets, we're gonna have to take it with a little bit more patience if that's the case. So as we approach the meeting, let's look at the general market metrics that we care about, starting with the Federal Reserve balance sheet that we covered a few days ago, that it increased on the 9th of December. It hasn't put a new high, so it's far from a breakout and big amount of increases in their sheet, but it is a move up, and if they were not believing really in the economy, they will have sold just like they did in all this area in there. They claim to be in tightening, and this move up is against that, but still a too conservative move up to be taken in consideration as to be able to state that the Fed is going nuts, very bullish on what's to come. Liquidity from China is still expanding. M2 is kind of putting a new low, so liquidity is shrinking, and Bitcoin tends to react to that in a delay way. It pumps when the M2 pumps a little bit after, and when it starts shrinking, like in this area there, then Bitcoin starts becoming choppy or even bearish. I noticed as well that the probabilities of ease has reduced 1.5 points from 97 to 95.4. I wonder what is influencing this idea that there's a no change on the table of 4.6%. And since I'm now asking for likes again, for comments, and for hitting the notification bell as well, let me know if you want me to cover live the event of the FOMC at 7 p.m. I'll see if I can do that. I need to ask for permission. Or if you'd rather me put in a video before that, fishing for better opportunities, assuming that the whole market goes up after FOMC, so you are well prepared, seeing what looks better at this time in the altcoin market. There's definitely some opportunities in here on the weekly RSI and the daily RSI. And guys, if you want to trade Bitcoin or any of the altcoins that we review in this channel, no questions asked. Bybit is the exchange that has them all, not just on spot, but also on future perpetual contracts. And if you use the link in the description supporting this channel, you can unlock up to 30,000 in rewards and have the lowest fees to trade on Bybit. But if you don't want to be having to deal with KYC requirements, if having multiple accounts using different emails to separate your strategies sounds like a good deal, and staying away from a VPN makes it even better, then consider one of my non-KYC exchanges. I have two of them. The first one that I will personally consider is Bluffing, and we still have 5 days left of this new campaign. I'm offering 10% cashback. You can see all the instructions on the screen. And if you use the link in the description, you get the lowest fees to trade on Bluffing as well. Give it a try before you deposit any funds on Bluffing. Install it on your iPhone, Android, and see if it's asking for a VPN where you are based. There's less than 1% of locations at the moment that are still requiring VPN to use Bluffing. So if you're one of those, then consider my second alternative, which is 2bit. It's also giving a quite substantial bonus of 9k and 40% discounts on the fees. It's a copycat of Bybit. It looks really good. It's been built by the same people from Bybit, and it's worth giving it a go as well. Thanks so much for watching this video. I'll see you in the next one. Bye bye.